All right, my friends, welcome to the show. I haven't done one of these in a while, so hopefully it's working right. But we were originally going to do this as a webinar, and then I was like, you know what, I want to do this as a live because I saw a lot of people asking questions in various groups or whatnot. So I'm live. We're live, hopefully, on LinkedIn and Facebook, along with webinars. So if you wanted to join the conversations, I'll see comments from people that. Let's see if you could do that. Let's you do that. Okay, cool. All right. New stuff. I haven't done this in a while, so apologize for that. But joining me in this special conversation is Jim Bell of MSOR. So, Jim, hey man, I really appreciate taking time on your day to join me for this conversation.
Hey, love it, appreciate it, and happy to help in any way we can. Been there, done that with the broker side of the community, so I know what it's like to sit in those seats and have these questions. So, anything I can do to help is it's my pleasure.
Yeah, and guys, look, if you guys don't know Jim, I've had the pleasure of knowing him over the years, and the last few conferences got to hang out, break some bread, and solid guy, and he's always willing to help and answer questions. You might see him tagged a couple times in groups and whatnot, when it comes to compliance and stuff like that, and so that's why he was the first person I thought about when this topic came up, because I saw some comments of like, hey, where can I get some direction? Where can I get, because as a consultant and someone that did compliance for my mortgage company and someone that has gone through the audits, federal, state, and specifically when it came to like RESPA, marketing compliance, messaging, trigger terms, all of that stuff, consumer direct, you play a lot of that. So I answer a lot of questions based off of like, because I get hired to come in and develop policies and procedures when it comes to like RESPA, marketing compliance and stuff for loan officers and companies. And so as I was looking through my lens through that route, as opposed to what some other people might look for, I was just starting to see some conversations and some actions and activities by people when it came to AI. And look, like before, like we went live, Jim and I were talking about like, hey, we've wasted time on AI just because we're like, oh, hey, I wonder if it could do this. I wonder if it could do that. Because we're just learning the system, right? But
Right.
realizing like none of those things were like super important for us at our business. But we're not here to talk about the distraction. But what we are here to talk about is compliance when it comes to AI, because it's definitely a wild, wild west. Jim has seen it. I have seen it, where people are doing some things that are absolutely a violation, and when it comes to from a compliance standpoint. And so we wanted to talk a little bit about that, but also answer any questions, because some people are asked, because they're not getting direction either from their the brokerage, or they're the broker owner themselves, and they just don't know where to look. They're not getting any direction from the wholesale lenders, and then the wholesale lenders in turn are not getting really any real directions from the investors. That's changed. And so I want to start there, Jim. So what are you seeing when it comes from like the trickle down? Because I always look at the end, right? Because a lot of people don't have visibility into that.
Right.
But like at the investor level, obviously down to the lender, and then down to the individual originator. So what are you seeing kind of from the top down when it comes to what do they want to see, and what are they being held accountable to when it comes to compliance, when it comes to MPI?
Yeah. So first and foremost, I mean, there's been three biggies that have come out in terms of regulators and/or impactful companies that have given positions specifically. Freddie Mac was probably the first one to come out and start really hammering in and kind of getting down to the nitty gritty of what they want to see from compliance. Michigan followed up with some state regulatory guidance, and then Colorado as well. Um, a lot of it really is kind of them looking at this and saying, you're going to be responsible for the outputs of your AI. So first and foremost, you need to have some framework around how you use it. You're going to need to have policies and procedures. When it comes to the specifics around NPI, I think you and I kind of talked about this before. It's the huge elephant in the room, right? It's the people uploading tax returns and bank statements and things like that into AI, into these public systems, which really creates an entire multitude of problems.
Yeah.
So from the wholesaler, from the regulator guidance, they're going to apply the same laws that we already have, right?
Yep.
So we have the Gramm-Leach-Bliley when it comes to privacy. We've got info security requirements. We'll start to, we'll talk a little bit about like disparate impact and discrimination. But all of that framework that's already been there for years and years and years is now going to correlate to what we're doing with the AI systems. And I think that's a big thing that we don't always think about that. And I guess the key is we have to realize that AI did it is not going to be a defense for something.
Yeah.
Right? Like you can't just go, well, it wasn't me, it was AI. Right? And I think that's a big piece of where we're going is understanding where your risk points are and then how do we mitigate those risks and show that we're paying attention to them.
Yeah, and guys, I want to stick with that point because like, oh, it's AI did it. As you should understand, let's take AI out of the equation. That's always the case. So as a lender, a broker owner, whatever tool you happen to use, the regulator holds you responsible and accountable to that, not the service provider, not the vendor, not to say that they can't also have some issues, but ultimately that doesn't absolve you. Oh, well, they did all of that stuff. Does not matter. You are responsible for oversight. This is the reason why, lenders have those vendor management, whether it's outsourced or internal controls for vendor management, specifically for that reason, because you are held responsible and accountable for what your vendors do, especially with that information. And so that's with what Jim's saying is that like AI did it is not a good enough reason. But I also, when we're talking about that is that there's a lot of people, myself included, that are building a lot of AI tools to help themselves because it's so easy right now for vibe coding and whatnot. Right. And this isn't a call about that. But what I'm saying is that a lot of people are building these controls that then loan officers are using because their loan officers like, hey, I'm solving a problem for myself. Here's something cool that I do here and there and blah, blah, blah. And then they're like, hey, this is, just something that if you want to use, go ahead and use it. Great. And that's awesome. And that's kind of like these crowdsourced solutions. Now, the thing is, and this is where I want Jim to kind of talk about that, is that just because it can be done and it's built does not mean it's secure. It does not mean that it has the proper controls and certifications in place that would pass muster with regulatory agencies, meaning like, and I'll have you kind of explain a few of that, but like, so none of these systems are built with that in mind, right? Whereas to like what you would call maybe a traditional service provider, they make sure like they're back in what they're using for their database, what they're using for the transmission control protocols, all of that stuff is certified to those certain standards that you are required to by the regulators. So, Jim, like if I'm a loan officer, I'll tell you right now, if any singular loan officer is developing tools, right, I would just kind of not really get into that yet until you see how things lie, or so to where you have the questions that you can make sure are being answered. But again, as we say, you are accountable, responsible, not that vendor, not that loan officer that decided to create these tools. Like it's you. So if I'm a loan officer, a broker, and I'm looking at, someone that's just like, hey, I just created this awesome dashboard of this that, tracking sales pipeline, it will attach to Arrive, the grab loan data, stuff like that. What questions should I be asking that vendor when it comes to like security and compliance?
Yeah, that's a great point. One of the big things they look for is one, where's the information going? Where is it going to be stored? How is it going to be used once it's there? And those are I would say those are the three big focuses that the regulator is going to look at. Obviously red flag if these things are now being stored internationally, right?
Yep.
We lose some control. You'll hear terms like SOC 2, right? Yep. Does it meet Gramm-Leach-Bliley? Do they have security breach notification policies in effect? And, so that in the event that data was breached on their end, that they've got protocols that meet the same level or greater than what we have as a broker community itself, right? Each state federally, if we have a security breach in our own organizations, we have protocols we have to follow to notify impacted individuals and the state regulators. We need to know that those vendors have the same thing. The other thing beyond just understanding where it's stored is how can that data be used, right? If this is functioning off of NPI or information that's out there, we need to know that it's not being used to train its model, to learn from it, and to utilize that data that we're sending over there that's proprietary and personal for its own purposes. It needs to be siloed, and they need to have protections in place to make sure that that data isn't just sort of further expanded into the environment.
Yeah.
So the other point I was going to make is, you mentioned loan officers, kind of think about the hierarchy here. If you're a loan officer building tools, you first need to talk to your broker owner and make sure they're okay with the tools that you're considering and deploying. And then broker owners the same, right? Have some sort of vetting process before you start deploying tools to vet. Do they have the right securities? Do they have the right checks and balances? And do you know what's going to happen with that data once it gets beyond your walls, so to speak?
Yeah. And that was one of the big ones that I saw, is that because I was, having conversations with people, and I said, hey, you guys should be running this by your, compliance department at your broker. And I know a lot of I'm telling you right now, there's a lot of broker owners, even the big ones, that have a tremendous liability right now because your loan officers are not doing any of that, or you're not doing any of that with the proper policies and procedures. And just having documented, it's important. Like auditors, regulators, they want to see all of that you have that, but like, where is your management? Right? Like, where is enforcement? Where, what are those controls? What does that look like? And then where's the messaging coming out to where you are setting that? And like, this is like, for example, and Jim, correct me if I'm wrong, because I've been out of the game for a while on the origination side, but in the lending side, but like, this is why you guys you have to do like SARS training, right? This is why AML, like all of that stuff, every 2 years, the sexual harassment type of stuff. These are like the check boxes you have to have. So like, do you think this is going to be one of those things to where like, this is going to be one of those certifications, they have to go through the training, whether it's like an hour, or whatever, of understanding compliance, understanding this, understanding that piece of it, so that you have it documented from a lending and a broker owner standpoint that, hey, my loan officers you've done everything you can to supervise and control. But again, you're still accountable and you're still liable, but at least that you've done all those things. Do you imagine that being the AI piece being wrapped into that as well?
I do. We're already seeing some of that coming to be. One of the big things they're looking for is documentation of the oversight that you're doing.
Yep.
Right. So whether that's training, whether it's having the actual policies and procedures in effect, we've actually started seeing some companies, and there's a whole new title that's starting to pop up, which is an AI compliance officer. So in addition to your info security officer and your AML BSA, which for many of our small broker shops, that's the same guy changing hats 3 or 4 times a day, right?
Yeah.
But in larger companies, this is becoming a role in and of itself, which is that person who's going to take on the responsibility for vetting tools, understanding. If you look at Freddie Mac's guidance, they actually go to the extent of saying, we want you to inventory all of the different AI tools that are available to you, even if you're not using them. If it's part of somebody's system and it's available to you, you're going to have to inventory that, then analyze what function that provides for you, and then give it a risk assessment of high, medium, or low. And depending on the severity or the rating that it's risked at, is the amount of governance and oversight you're going to have to employ to satisfy their requirements. So that means, if you've got something that's a high risk model, you're going to have to be looking at that on a regular basis, and not just doing the oversight, but documenting that oversight as well. We're seeing this in many different areas throughout compliances. It's not enough to be doing it. Like information security is the same thing. It's not enough to just do it. You're going to have to prove that you actually did it. Brings up another point about AI that can sometimes be challenging, is the documentation supporting decisions and the oversight and the things that the AI is actually doing. When you talk about lenders upstream that are making decisions based on this, there's a lot of concern about, they're calling it algorithmic bias that can play into those lending decisions. And they want to see the documentation and how did you formulate the decision that came out so that you can show that it's not having disparate impact or discriminatory effects on lending. Mm-hmm. So yeah, documentation and oversight of that document, or I guess documentation of the oversight, is going to be critically important going forward. So whether it's individual training, showing that you not only have the policies, but they've been vetted and reviewed on a regular basis, are going to be part of the normal cadence for compliance going forward.
Yep. And speaking of that, is when you think about the waterfall effect, and again, like we talked about in the beginning, from investor down to LO in the streets, is that for brokers, understand that your wholesale lenders, they're liable and accountable as well, right? They don't get a pass because you guys did something, right? That's why buybacks, repurchases, that's still a thing, right? And so, and you're, again, that's part of your agreement with your lender, and then understanding that at some point, investors who those lenders sell their loans to, they're going to have some new controls and requirements, and guess what? That's going to come down to you. So you need to get in front, and that's going to play into whether you're, approval and things of that nature, and we already see that on other different areas. So this is just going to be another one of those. And just so understand that, you are going to see, as Jim is with his conversations, because obviously he does it at an entirely different level than I do. So, and he's in the thick of it. So as he sees that stuff, that's going to trickle down to you, and you'll be like, well, what about this? And what about that? And at the end of the day, it doesn't matter what you think or what you think is common sense or what you think is good or not. Same with people that are using overseas people, whether you think that's a good thing or not, or this or that. At the end of the day, it doesn't really matter what Jim thinks, I think, or you think. It just matters what the regulator has declared is the standard and the law, and that's all we could really, all we could really abide by. And so, I think when you have a lot of people over there, and it's well intentioned, and it's not a wrong or right. It's just at the end of the day, and I say this all the time, and when I'm posting, I'm talking about compliance, and it says, look, I always put it as bullet number one. Doesn't matter what I say, anyone says, the only opinion and perspective that matters is the regulator, period. Full stop, end of story. And so that's where we go from there. And this is just gonna be one of those things. And then the second thing I want to say is, guys, is yes, the regulators and that stuff is going to be one thing, but what you need to be worried about more than anything else, right? Well, look, let me rephrase this. The first thing you need to be worried about is protecting your client's information. All right. That's what you need to be worried about. First and foremost, you need to protect it as if it was your own. And I see too many people doing, and guys, this isn't a new thing, right? I could tell you stories of my mortgage companies, fast and loose and shit with MPI and stuff like that made me insane, right? Made me crazy and furious. But we need to be real about our clients' data, because at some point, if some other channel or other option, whether it's completely consumer direct where they bypass humans generally because it's more protected, and all of a sudden we start seeing these rash of AI breaches and all these other stuff, all this public information going on, we're going to lose trust, which is going to hurt business, right? That's a piece of it. So, but what I wanted to say is that what you really need to be worried about is lawsuits from lawyers, because at the whole NAR thing just opened up the floodgates. We're seeing it now with TCPA. We're seeing it now with don't forget, the regulators will come in when they, but honestly, that's the lesser bite right now. There's loan officers, and they've talked about the law firms that have talked about what they have people out on social media, seeing people post and groups and whatnot, to see that one loan officer or agent saying, yeah, I uploaded all this data to ChatGPT. They're going to screenshot that. That's exhibit A in your lawsuit. And so, all of you really need to be, because if I'm a lawyer and I'm this is low hanging fruit, because you guys are just, willy nilly with NPI and you're just putting it on there and this and that. And this is what we're talking about. So that's, as an originator, what I'd really be worried about. And then that, again, it doesn't roll downhill, it rolls uphill, because that's going to be if that's an individual loan officer in the street, then it goes to the broker owner, right? And then above and above and above, and everything's where's your control, right? Where's all, where's your oversight? Where's the documentation? And then when it's I don't know. I thought it was okay. AI did it, right? And the reason I'm bringing this up is because our industry is notorious for not doing anything until someone gets caught. Right? Because well, how many times is that someone's going to be the first, someone's going to win a prize on this, and not in a good way. And then it's going to be off to the races. And so I just don't want that to be anyone. So Jim, what do you what would you?
No, I agree. I mean, at some point there was a first asbestos commercial from a lawyer, right?
Right.
That we see every night about, the lawsuits that are coming from that. it could very easily turn into the same type of environment here. There's right now some of the regulation that's out there, not necessarily regulation, but some of the guidance that's out there is remarkably ambiguous. Like Freddie doesn't even define exactly what AI is. If you really look at it in the broadest context of what they've given us, it's, you turn on your computer, you're using AI, right? I mean, whether it's, spell check or Grammarly or, the chat bots that we put on our websites, all those kind of things are opening up potential, for there to be compliance issues.
Yeah.
We've seen the stories of, we talked earlier about Fixer, right?
Yep.
Not that I want to pick on the software, but you're using some sort of automated software that helps you manage emails or respond to emails. That brings up a host of potential concerns that you need to, again, go back, verify where's that data going? What are they doing with that data? Because you could be trading emails with somebody about social security numbers, and that gets out. There's a breach in you're right. There's going to be an attorney sitting at the other end of that phone pretty shortly that's saying, you kind of did this because my client's data is out there, and it's because of your lack of oversight over the tools you're using.
Yeah.
And it's, I think attorneys, to your point, play a big role in this, right? That's a very, very big thing. You're going to have less exposure on the state side than you will with the number of consumers if you expose their data to harm to them.
Yeah.
So, I mean, we've seen it. We saw it, 2 or 3 years ago, we were seeing that there were case after case after case where clients were getting emails from different law firms about their websites not having the AS or the widgets on there to help for people who couldn't see, read. So that's coming, right? And I mean, the chatbots themselves worry me a little bit too. Is if you're using chatbots, going back to documentation, you need to make sure that you've got all the recordings and documentation of all those chats. Because again, if that comes up in a lawsuit, you're going to have to be able to defend what that bot did.
Yep, absolutely. I want to show this question, or not the question, but this comment by Dave Kaufman. So Dave says, I heard from an attorney that handles all of their foreclosures about a local credit union that was using AI for full underwriting is now realizing about a year's worth of loans written with significant errors. They're not able to sell these loans, right? And so they hold them on their books. So that's what we're talking about, right? Like things like people are doing it before they really understand. And here's what I'll also tell all of you, and this goes into just the companies that are doing AI now, right? And this is, I always get dinged with being like an anti-AI guy just because some of the things that I say, even though I use AI all the time, right? It has nothing to do with that. I want it done in the right way, in the smart way. That's my thing. So if I'm anti-AI because of that, but like when we are at the beginning, right? I put like an image up of like back to like Super 8mm film to now we're streaming our movies, right? And the timeline of that. And so like we're at the the Super 8 film stage of AI, right? So there's two things why that's important. One is understanding that like we haven't even gotten to like DVD, Laserdisc, and freaking HD DVD. Like, we haven't got Blu-ray. We're not even close to that yet. So like AI, we are just in the beginning of it. So things are going to get better and better. Also, the cycle time. And so this is what I try to explain to everyone is that for those of you that are like me, that are a technologist or a former engineer, you understand very well about the theory of Moore's law, right? And so, but within the AI world, and basically you think of that as a 12-month cycle, right, of technology. In the AI world, this is the analogy. It's like a new iPhone comes out twice a month, right? That is the speed at which AI is evolving and that companies are using it and developing it and how much money's being thrown into it. And so you're seeing all these companies prop up. And I went through this great webinar with Cody Sanchez, who's a huge investor in these and does that and says like, look, these are on like 18-month cycles of these companies being awesome. And then they drop because it's happening too fast. It's happening too fast. So I'm saying all of that is to like, hey, slow your roll on some of these things, because I've already seen loan officers lose 6 figures developing software, realizing that someone just built this in AI over a weekend that took the utility out of what they were going to charge people for. right? And so like, and for free, or in some cases, because then lenders are going to be doing this thing. So I'm saying slow your roll, and by slowing your roll, I'm not saying put your head in the sand like an ostrich and not pretend like AI is there. But like, one is like Jim and I were talking before the call, know what problems you're trying to solve. And by problems, meaning things that are actually going to help me generate revenue, right? And then do it in a structured and compliant way so that it doesn't end up being the end of your career or your end of your license, end of your company, right? And as a broker owner, I know a lot of you are swimming naked right now. A lot of you don't have the policy procedures, the oversight, the training, or any of that stuff. And that's that bill. And I've seen it too many times, fast and loose. Like I said, I've been on the lending side, been a part of the fast and loose, and that bill, my friends, will always come due at some point. And what I'm saying is that nobody wants to be in the first in the pull on this one. All right, I promise you, because it's going to happen. It's going to come up, and then you know what happens? Then on the lending side, they don't be like, all right, well, how do we customize this to this? It comes as a door that slams shut, saying, hey, none of you use AI for anything at all. Right? Like, that's what it's going to come down to. I've seen it happen. Jim's seen it happen. Like, that's because it's the easiest way to start is like, nobody does it at all. And then no one, lenders again, wants to have that type of liability. So Jim, what would you add to that?
No, I think you're right. I mean, starts with policies and procedures, right? Like, look at what you're doing, look at what you have, what tools are you using, make sure that you've got policies around your AI so that you have a framework to which to operate.
Mm-hmm.
And then set from there. Like, I've been working on a series of checklists, right? What should I be doing when I line up with a new AI, tool? Mm-hmm. What should I be doing when I'm doing marketing through AI? What should I be doing? So that you've got sort of those punch lists of things that sort of keep you out of trouble, right? Like, keep it simple. These tools are incredibly valuable, but they're also incredibly dangerous.
Yeah.
Right? They expose you to a significant amount of liability. So I can't stress enough, document what you're allowed to do, what you're planning to do, and then document your review to make sure that the outcomes of those and the security associated with it is well formed and able to be defensible. I mean, defensible positions right now are an incredible piece of ammunition to keep you in business. Yeah. I don't want to be the one that gets that phone call that says, "Oh, by the way, I just got hit with a state exam related to this because I have a problem." The number of times I get that call where I have a complaint at the CFPB, I have a complaint at the state of Virginia because I did this, and I didn't realize I couldn't do that.
Yep.
Now it's too late to go back and say, "Well, we're working on policies, and we're thinking about doing something different."
Yeah.
You want to get ahead of that and start really thinking about how do you stay ahead of this in your own businesses. And it doesn't mean, again, I think, Jason, you said it perfectly. It doesn't mean you don't use these tools. We're not trying to scare people off of using the technology, because it's making us light years more efficient and effective
100%.
in some cases. Yep. But you cannot lose the oversight of what those tools can be doing too, right? I was talking with some of my staff earlier today about this, and one of the things we talked about was somebody brought up, well, at what point does this stop, right? Like, now you're checking this and you're checking that, like, and I think it came up in an underwriting scenario that it was, well, you're going to have to make sure that you're sort of QCing what's being underwritten by these things to make sure that you concur with those findings and you don't see something wrong. And it's like, well, at what point? It's like, well, this isn't new.
Yeah.
We're just, instead of checking, when I was running QC for a prior company, we QC'd our underwriters on a regular basis. Somebody re-underwrote a certain percentage of their work.
Yeah.
Now, instead of QCing the underwriter, we're QCing the bot or the technology to make sure that technology is functioning the way we expect. I think be prepared, use the tools, but don't bury your head in the sand that it's just doesn't come with risk that you can't, that you shouldn't evaluate.
Yeah. And to that point is like, cause like, that better announcement of like, originating a loan in 47 seconds or whatever. And and whatnot is like, guys, I don't care if it's internal, highly developed, like it's still going to hallucinate. It's still going to, it's just going to happen. And so it's again, you got that QC, like to what, and I'm glad you brought that up because that was going to be one of the things that I talked about. Was, you're still going to have the checks and balances because you have to, and to, Dave Kaufman's comments right there, no checks and balances. And so now they're going to pay the price of that, right, for those non-performing loans. And so, like, when it, or at least unsellable loans. And so, what I would say to all of you, and what I'm going to do is, from our conversation, Jim, just to take the transcript, I'll try to create just a simple guide for everyone of things you should be thinking about. I was laughing a little bit while you were talking because I got to, and I try to minimize it, but I have a Mac. So it's like, it just popped up in the right corner. It's from a broker owner. Well, rename nameless, but he's like, thanks for scaring the shit out of me. He said, thanks to you and Jim for scaring the shit out of me. So that was the text I got, just a second ago. But here's what I tell all of you is I want you to think about your personal data and think about, like, what if you were in a position to where someone you were working with had, like, your tax returns, bank statements and stuff like that, what would you be comfortable with them using AI for? You know what I mean? Think about it from their terms. So to try to put yourself in that, and then would you want them doing what you just did with your thing, right? Would you want them doing this or that? And like, and it just popped in my head, but like, a lot of loan officers I know, like, will put full loan files in their own personal CRM. Sorry, that data does not belong to you, right? The data belongs to whoever, like the brokerage and then the lender. Like, so, like, just know, like, putting social security numbers and stuff in your own CRM, like, that is that is uncompliant. So, like, just throwing that out there right now. Like, they didn't give it to you, they gave it to the company you represent. So just know that, like, you are in violation if you're just storing NPI in your own CRM that has no control or oversight from your lender. Like, I'm not trying to be a Debbie Downer because I know some people do it. But I'm just telling you guys, like, this is the real world that we gotta live in now, and it's only gonna take one time before, and it because we've seen it. Like, hey, I don't know, Dodd-Frank, is that a thing? Like, it all comes from other stuff, right? And it only takes a few times for something to happen to where everyone's got to pay the price, right? And then what happens then costs go up for everybody for compliance and this and that, regardless of what you're saving with AI. So, I wanted to put this up here, just because, we were talking with it. But guys, look, if this is something, that you need help with, when it's compliance or licensing, like I said, Jim is a wealth of information. He's always been jumped in to help and answer questions from people. But you go to msource24.com. I'm assuming there's some sort of form or contact or whatever, or Jim's not, like, he's not invisible, like, he's on social media. You can connect with him. He does reach out. In fact, Facebook Messenger is how we were talking about doing this whole thing. So, like, so guys, he is around. He's available. Highly recommend that you check him out. I've recommended him more times than I could think of for things because I trust him. I know him. I know a lot of his clients, and they trust him. Some of his clients are my clients, and so I know the value and the wealth of knowledge he has and what he does. And like I said, I will come up with a guide, and Jim, I may reach out to you just to send it to you to add anything to it based off of this. Just a quick sheet for you guys to look of, just simple things to adhere by. But this is what I'll say for all you broker owners out there, mom and pop shops or the bigs, is you better have this stuff dialed in, because at some point it's going to come down like a hammer. I would be worried more like from lawyers and regulators, but I'd be worried about both if I were you. But especially if you guys are doing a lot of volume, a lot of things, you're using AI, you better make sure that you're documenting and that you have it. But Jim, I'm gonna leave you with the final word.
Yeah, I don't think you could say it any better than, we have Dodd-Frank now, right? And that came from somewhere.
Yeah.
Right. A lot of the regs and the rules and the things that we all know and love so much are the result of things we did not do very well, right?
Yep.
I would say, years and years ago when I was on the board for Michigan for the Brokers Association, we worked on getting licensing passed, and licensing wasn't even a thing.
Yeah.
But one of the things that we talked about before that was, if we don't start regulating ourselves, somebody's going to step in and do it for us, right? Well, guess what? We did, which is now why we have licensing and why we get to do CE every year and why we have so many of these things. So your point is very well taken, Jason, and you couldn't say it any better. If we don't stay ahead of these things, we're not going to be happy with the outcomes when the government decides to step in and tell us what we can and can't use and exactly how we're going to run and operate our businesses.
Awesome. Yeah. I'm glad you said that, because I can't, like, that's it, right? That's it, is that we either do it or someone's going to do it for us. And we all know that it's never going to be something that we enjoy. It's definitely, and sometimes, as we know, there's a lot of stuff that we deal with that's like, there's no common sense in that or whatever. But again, we had to accept it because we didn't police ourselves. And this is going to be one of those things that we want to be on the right side of history on, because we know what the wrong side looks like, and it doesn't look good, and it's going to suck. And so let's just get in front of that now. So Jim,
I always say that you could sum that up in 2 words, right? MLO comp.
Right? Yeah. MLO comp. There we go. Right. And here we are still, what are we, 17 years later, right? Like, or 15 years later, that where this is what it is. And so like we, and does that have common sense? Like some things of like from the spirit of the idea, sure. Right. But implementation, execution, not at all. Right. And so like that, and that's just what we have to deal with. So Jim, hey man, thank you so much for doing this and spending time talking with that. We've, again, this is the first time I've done the live and the webinar, so we've had people from everywhere. So thank you guys for attending live on LinkedIn and Facebook. Thank you guys that registered and joined the webinar. I for those that registered, I have your email addresses, so I'll send out and I'll post it online too. But like I'll make sure that I send out the transcript and the stuff that we have. You guys can watch the recordings on Facebook and LinkedIn. But we want to make sure that you guys are on the right side of this, and so hopefully you found value in our conversation today. Like I said, if you have more questions or whatnot, definitely reach out to Jim. Wealth of information, great dude, and I'm always available to help as well with my community. So this was a great kind of an impromptu conversation on the broker journey. So Jim, thank you so much. Thank you to all of you for tuning in, and we will see you on the next episode. Take care.
Awesome.